Welcome to the Family Banking Show with your hosts Rob, Derek, and John, where we dive into the world of the infinite banking concept and discuss personal banking strategies to secure your legacy and build generational wealth. We're glad you're here, and we hope this episode serves you well.
If you're interested in learning more about setting up your own family banking system, send an email to thefamilybankingshow@gmail.com. We'd love to hear from you.
Welcome back, ladies and gentlemen, to the Family Banking Show. We are your hosts, Derek, Rob, and John. We had a nice little Easter break. Now we're back at it, guys. How you guys doing?
Yeah, great. It was celebrating the resurrection of our Lord and Savior. It's always a blessing, and it's fun to have family over. And yeah, love this time of year for sure.
Yeah, I had my parents visited from Texas, and super quick visit. It was like 48 hours, but I really wanted them to see the way my church does our Easter services. There's like a Saturday night thing. We call it the Easter Vigil and some different things that we do. And it was just so much fun, like a huge just like celebration of the resurrection. And I just love the way my church does it. It's just a really special way to kind of portray the resurrection and see where we come from and stuff like that. But the whole time my parents were like, it is freezing here. Like 85 in Texas and it's like, 57. It was like perfect. It truly was like a perfect weekend, I thought. And still, it was just like freezing for Texans. So, Easter weekend was just wonderful.
Yeah, I got to enjoy the warm weather in April when we get it. I was just talking with a coworker and saying, kind of the classic Minnesota, like, well, it could get worse again, not like the half glass half empty type rather than the glass half full type. So, John, you're newish to Minnesota. It could still get worse, but
I'm like 3/4 full and thinking that it's great, but other people, you're right, are like half empty and like it will be empty. So
Well, I went to a Minnesota Twins game, and it was Wednesday night, so an evening game, and it was 70 degrees and just perfect. And the Twins won, so it makes it all better too.
Fun.
Yeah, good time of year for sure to get outside and walk the trails.
They have a great stadium too.
Oh yeah, it's beautiful. Yeah.
Yep. Yeah, my wife and I just went to one 2 weeks ago.
Okay.
For like a Saturday, like it was a birthday. We had like a day, just did some fun day stuff, and yeah, great. It was a day game. Yeah, a lot of fun. I love that stadium. It was a good time.
It was pretty empty still, so I think a lot of people are waiting to purchase tickets until it warms up a little bit more, but a fun time for sure. All right, guys. Well, hey, in this episode, our plan is to talk about the value of controlling the banking function. And for our listeners who maybe are new and not sure what the phrase or term banking function means, it's simply just the process of getting a loan or access to capital, access to cash, to do whatever you need it for. It could be purchasing furniture or a car or new appliances, paying for college, whatever it might be. It's whatever you would use a bank loan for. Typical financing, that's what the banking function is. That's what they control. In order for you would have to repay to them, pay them interest in order to gain access to some capital, to some cash. And John, I want to turn to you first. You had mentioned a great story to kind of help illustrate the problem, and then maybe let's dive into some of the solution points too.
Yeah, absolutely. My favorite movie of all time, and it is solidified after the most recent time I watched it a couple weeks ago, is The Warrior. It's just Warrior. And sorry, Rob, you just said The Warrior before we recorded, but
I know, sorry.
So, Warrior stars Tom Hardy. He has like, 10-inch traps, and he's just, super jacked out of his mind in this kind of like a UFC centered movie. But one of the main plot points, the heaviness of this movie, part of it is one of the other main characters, Tom Hardy's brother, is undergoing financial hardship, and he has lots of medical bills for his daughter. He's just a school teacher, so he doesn't make a ton of money. His wife does some part-time stuff, and he's in a situation where he can't pay his mortgage. It shows scenes where he's going to his banker at the local credit union, and, it portrays the banker as kind of this, uninterested, just, you know, you're in trouble. Sorry, I can't do anything to help you. And it really speaks to like become your own banker, the golden rule. He who has the gold makes the rules. And this is in a sense Dave Ramsey's point, where it's the borrower is a slave to the lender, where this main character was at risk of losing his home, like the home that he had his first few kids in, that's memories are made, that is just the centerpiece of his family. So it's not just a financial transaction. Like there's emotion and there's weight to this situation. And so the whole movie is predicated on this idea that he can lose his home, and that if he doesn't come up with, I think the number was like $50,000 or something like that, then he's going to lose his home in the next 90 days or something like that. So this weight, this emotion. I think the movie came out in 2012 or 2013, somewhere around there. So it was right after the '08, financial crisis and the recession and the housing market just plummeting. And in the movie, they even talk about him being upside down. And there's so much emotion, so much heaviness for his family, for him as a father who wants to provide, not being able to repay the banker, right? And it just speaks to just how valuable it is to just be able to control the banking function, to be the banker, to have the golden rule, to be in, he who has the gold makes the rules, to make the rules. If you're in financial hardship, if you have medical bills that you need to tend to as a priority, do it. And, all the while you control when and how, say in this case, ideally, we're able to even control our mortgage and how we finance our home.
Yeah.
So it's just such a powerful movie, first and foremost. If you haven't watched it, I think Derek and Rob both haven't watched it, so
Nope.
I'm kicking them to
I'm going out.
try to watch it. But
Mhm.
it's a very good movie, but also just speaks to what we can do to alleviate stress and just add peace to our lives, where we can control the banking function. We're not going to be subject to a foreclosure, to maybe we have a slight transition phase where we're unemployed or something and we just can't get a loan or whatever it may be. The banker is only going to give you the money. What is it, Rob? If you don't need it, or is
Yeah.
someone
We'll hand you an umbrella. We'll hand you an umbrella when it's sunny.
yeah. So, and something we talked about before recording that I'll share right now as well is like, I'm closely connected with someone who works at a bank. He does business loans for lots of small businesses, and he shared a little bit about underwriting and how they even vet these loans, how they underwrite. And so he called it the 6 C's. And it's just incredible to me. The more we talk about this, the more I just love infinite banking and controlling the banking function. So he said in underwriting, they want to make sure that you have these 6 C's kind of checked off. The first is character. The second is capacity. And capacity means like DTI and kind of your loan servicing ratios. Capital, do you have a down payment? Do you have collateral or, necessary funds to even get into this loan? Collateral, is there an asset that's going to back this loan in case you can't repay it? Conditions, just like, economic conditions, the rates and everything else. And then lastly, your credit score. None of those matter in infinite banking. Like you just
Right.
a phone call. And I'll stop talking here in a little bit, but like those 6 C's have a lot of weight to it. And some of it's even subjective, where it's
Hmm.
you're just at the whim of the banker, the employee of the bank, whether or not they'll give you the loan. And if they like you, great. If not, sorry, you're out of luck. Even if you have everything else taken care of.
Yeah, it's the thing I agree, John, like so well said. There's with the infinite banking, insurance policy, early cash value policy, whole life policy, these policies that we will help design for you. They have contractual right. You have a contractual right to the cash value of your policy. You don't have to ask anything. You ask, say, hey, can you send me a check for $10,000? They just say, where do you want it? When do you want it?
Yeah.
They don't care. They don't care what it's for, and it's your right. You don't have to jump through any hoops to get it. And it's just such, like you're talking about in the movie, John, like when you really, really need it, and let's say you lose your job and you really need the money, you're not getting it. And so that's what I just love about the freedom that we have with our policies is it's a contract, and we can get access to our cash value. It's part of the contract. And so it's just that freedom and peace that you get knowing that as you're capitalizing your system, as Nelson Nash says, think long term, capitalize your system, and you build up the capital that you can then access it if you have to, or if you want to, if you have an opportunity. Yeah, and then you can determine the payback schedule. So if you do get a loan from a bank, you have to pay it back on their terms. Or if you take a loan against your own policy, the cash value in it, you determine the payback schedule. For some reason, some kind of life event happens, you can take a pause for a month or two, and so the flexibility and freedom on it is just really gives you so much peace and so much control over and that's that phrase too, controlling the banking function in your life. That's a phrase from Nelson's book, Becoming Your Own Banker. It's you really do truly control that function, and it's the amount of peace it gives you and freedom it's worth a lot.
Yeah. Yeah. A couple of thoughts that jump to my mind right away is, nothing that any transaction with the bank is never guaranteed.
Right.
We've brought up, you're never guaranteed the loan. You're also never guaranteed your deposits. Whatever you have sitting in a bank account is not yours anymore. It's the property of the bank.
Right.
So you are putting yourself in a position where you have potentially zero options. And that's kind of the storyline of this movie that John's referring to is, somebody gets in economic hardship, maybe gets laid off for a couple months, and, their options dry up. They have nowhere to turn to. And if you controlled the banking function, you would potentially have an out. The other thing too is, as the bank is looking at character and collateral, they're trying to assess, is this a risky transaction for the bank? And for you as the borrower, you're trying to convince them that no, it's not risky. They're taking a bet on you as the person who's going to be servicing the loan or paying the loan. And I just, stop to think about how many small businesses or investment deals have just been dragged on and on and on and gone through the ringer with the bank, ultimately just to get declined because they say it's too risky. But you could have potentially doubled your money or, even made a great return. Not saying it needs to necessarily double, but if you are an expert in that field, think of even like house flipping. A house flip is too risky for a bank generally to loan money to you. So you got to turn to a private money lender, and now you're paying 15 to 18% or something crazy like that. But having that banking function and having access to capital without any of these hoops to jump through is incredibly rewarding and can be very lucrative for people. One more thought is the amount that banks or when a banker is willing to give out loans is speculation. There comes periods and times in the economic cycle of, hey, we're very loose with our standards. We're going to approve a lot of loans. And then there are other times when things get hard, the economy gets tough, where they tighten back. And that's exactly when people oftentimes need access to those loans is in those certain situations. When everything is doing well, a bank loves to give out loans. When things are going really poorly, then that's when the capital dries up and they're not willing to approve loans. And when things are going poorly is the greatest opportunity for investors to make a return on their dollars. So if you're an investor, even or a small business entrepreneur or something like that, think about those things. When do you want to be getting in, or when are you going to maximize the return? It's oftentimes when there's blood in the streets. And so that's when a banker is least likely to give you access to capital. But that's where the greatest potential or value add is there for you as an investor or business owner. What are your guys' thoughts on that? Any any additional takes that you'd like to add?
I think it's important to emphasize what you talked about, that our deposits aren't even safe, and
Yeah.
controlling the banking function to that end. So I always break down the banking function simply as like the storage of our capital and the financing things of life. And I
Mhm.
think we've talked a lot about financing, but the storage piece, controlling that is one of the most underestimated benefits that you can get, where not many people in America, for sure, and that I come across, even know that the deposits, like, I see on my bank account, whatever savings account, there's X amount. Like, that's not mine. That's not protected. If the bank were to go under with the new Dodd-Frank Act, I
Mhm.
forget what year that came out, but
Yep.
um, there's no guarantee that I'll ever even get that back. And
Yep.
I know that even the storage of my capital, like, that's super safe and legally protected, that they can't do anything with it. And I'll always have access to it. So having that peace of mind that if there is another recession or if there is another bank failure, which is unfortunately more or less bound to happen because of the
Yeah.
banking practices and the unethical, in my opinion, nature of
Mhm.
fractional reserve lending, they're not going to be able to pay you back those deposits. It's just an IOU, and then they run with those deposits and try to maximize their profits at the expense of the depositor, of me, of you, and the innocent, trusting customers of these banks. So I just wanted to emphasize that point. It's just even the storage of our capital is under our control to a greater degree. We get more earnings on the storage anyway. We get more benefits on the
Mhm.
storage anyway, but also we get more guarantees of having access to it, and it's not just going to be wasted away by a potentially, you know, uh, unwise banker.
Yeah.
Yep. Yep. Yeah, and the other another piece to that too is, when you bank, when you become your own banker and you have your own family banking system and you do take policy loans against the cash value in your policy, and you are paying it back and you are paying interest on it, when that interest is profit to the insurance company, and if you are working with a mutually owned insurance company, dividend paying mutually owned insurance company like the kind we work with, then that profit of the company comes back to you as dividends, where the profit of the interest you give to a bank goes to the stockholders, goes to the bankers. It doesn't come back to you. So just yet another reason, become your own banker, because then you can take advantage of all the benefits of those transactions that you have to do anyway. It's just yeah, it makes too much sense not to do. And so that's what we're trying to guide people and help and open up some eyes
Yeah.
to the benefits.
Yeah. One thing that, John, that you had mentioned there is the higher earning potential within a whole life insurance contract versus a bank. And, even high yield savings accounts, like let's just pick on SoFi for a while, or really any kind of electronic bank where they don't have storefront. There's not a person that you can actually walk in and talk to. Um, but they're promising, 4 or 5% or, whatever it might be. For them to promise those things, you got to start to ask the question of, well, what are they doing with those deposits in order to generate those returns? It's unlikely that that bank is buying a treasury bond or something like that, as something that's, seen as kind of the industry safe standard, which, speculation about that. But, to continue to keep up that type of yield, whereas the other banks, your major market banks, the Wells Fargo, the Chase, the JP Morgans, they're not doing that. And maybe it's because they're just so uber profitable and they know that they can make way more than promising that high yield. But still, for those high yield banks to continue to survive and to pay their overhead expenses, you should, as the consumer, be thinking about, well, what are they doing with those deposits? And how can I find out and have assurance that that's actually occurring? Versus with the life insurance world, we actually have reports and data that is showing what those life insurance companies are putting their premium dollars toward in order to continue to guarantee the payouts in the form of the tax-free death benefit and in the cash value. So that's not to say that these other banks don't have those reports, but it is just a word of caution to our listeners to think about what is it that they're doing in order to generate those types of yields when the other larger banks in the US economy are not doing those things. So that means potentially that in order to generate those higher yield savings accounts, that they're taking on more risk as the banker, as the lender, and has a higher risk of default and won't be protected or as highly protected against those economic downturns. So just food for thought for the listeners, but it's certainly a word of caution to all of us to consider, at least do a little bit of research. What are the banks doing with those deposits? Yep. All right, guys, any final comments here about the value of controlling the banking function?
It's just such an important concept, and I just want to reiterate that the control and the freedom you get and the peace you get from it, it's hard to put a number on that.
Yeah.
It's really hard to quantify it, but it is worth something, as I'll say that much.
Yeah.
Yeah, and I was just going to add that this isn't going to happen in 6 months. This isn't going to even happen likely in 6 years.
Yeah.
This is a long-term, long-range thinking process that we can help you each step of the way to get there. And I'm even preaching myself to just continue to have that long-term approach. And knowing that my kids, Lord willing, my grandkids, they're going to really experience the peace. They're never going to have to be the main character of Warrior and think about losing their family home and stuff like that. Like, they will have autonomy in the banking function, and that's just an incredible blessing for them.
Absolutely. Well said. Yes. And if our listeners are interested in learning how to start their own family banking system and to get the control of this banking function like we're talking about, feel free to reach out to us. Send us an email at thefamilybankingshow@gmail.com, and we would be more than happy to help you and your family. All right, guys, we'll see you in the next episode.
See you guys.
Thanks.
Thank you for joining us. If you're interested in a conversation about anything we've discussed, you can find our contact information in the show notes below.
And subscribe, follow, and leave a review to help spread this message and to help families across the country discover the generational blessing of IBC. May God bless you, and we'll see you next time.